Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in and take a look at the weekly Bitcoin analysis and news, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would really appreciate it if you could help spread my easy to understand analysis to help others make more informed decisions in the market. And that would be awesome. You can do that by smashing the like, ringing my bell, hitting subscribe if you haven't, and then sharing your thoughts or questions in the comment section. Let's dig in and take a look at the news first, and then we'll dive into the weekly analysis. Here we have, according to CNBC, 40% of Bitcoin investors are now underwater. New data shows, and the data comes from Glassnode. So Bitcoin down 55% from the November peak, and 40% of holders are now underwater. I know it's a really, it can be a challenging time for some of you who are underwater. It's emotionally challenging and it's financially challenging. So remember, if you don't sell and you hold, more than likely you'll recover. But if you sell when you're underwater, you lose. So in the last month alone, 15.5% of all Bitcoin wallets fell to an unrealized loss. As of the world's most popular cryptocurrency plunged to $31,000 level. Well, it actually dipped down to 29K today. So, and it goes on to show additional stuff from Glassnode, but I'm not going to go through it because that's basically what it says. Bitcoin whales jumping ship as exchange inflow reach 3-month high. For those of you who don't know, exchange inflow means whales or like people are transferring Bitcoin into the exchange. Typically, that means that they're going to probably sell. If they leave the exchange, that's called exchange outflow. They're taking Bitcoin off of the exchange and probably into cold storage or other places. And this means, so with this, you can see what happened. Well, Bitcoin dropped, inflow onto the exchange, Bitcoin gets sold, selling Bitcoins drops the price. So according to you today, Bank of America proves Bitcoin is not portfolio diversifier. To be fair, really not much in equities is a portfolio diversifier either, nor is gold. The best thing right now is to have dry powder, USD, the dollar on the side, or equivalent in stable coin. So nothing. I just thought that was funny from Bank of America. Banks, they don't have a choice but kind of adapt to the blockchain and crypto space because there's money going, there's money to be made, but at the same time they're at a crossroad because crypto and Bitcoin could literally take make it very challenging for banks to survive. Let's see where be in crypto. This article, Central African Republic under scrutiny by IMF after making Bitcoin its legal tender. No surprise there. IMF wants to control these developing countries by providing them loans and then telling them what to do. And it's just think about it. It's like, these poor developing third world countries, they're stuck in a hard place. On the one hand, they need money. On the other hand, if they take money from the IMF, they get told what to do. So the best thing to do is, for these countries is to slowly build their own infrastructure and not be dependent on the IMF. how banks are trying to discredit Bitcoin. Wow, what a surprise. That comes right after me talking about the IMF. So this article is about how traditional finance, they are waging a war against Bitcoin and crypto. And I come from the banking industry, and so a lot of these propaganda or war, they're very subtle. And so typically you pick something that doesn't seem to that seems like it's for a higher purpose, a higher cause, like climate change or energy usage. So if you focus in on that, then it looks like you're going for a higher purpose. And so people tend to gravitate towards those ideals because of their moral compass. And so by targeting, like for example with Bitcoin, these traditional finance or IMF or these institutions, they go after energy usage and the proof of work blockchain. Then essentially by doing that and putting laws in place to govern that stuff or exclude Bitcoin or anything that use proof of work, they thereby eliminate Bitcoin. So that's how it works. And it's you over time you see them like say various different things, but usually and think about why it's so. Why do they all say similar things? Think about it. Because you have, like, for example, in the U.S., you have the American Banker Association. In other countries, you have similar associations, if you will, and they all meet and they all talk and kind of get on the same page about how to execute some of these strategies, and they're very subtle. According to Finbold, this title is Chief Strategist Warns Government Planning to Implement De Facto Bitcoin Ban. Similar situation. Just everything I just said. According to, here's the crypto heat map right now, crypto market. You got BTC around 31.5K, down 6.64, but dominance 41.68. Ethereum 2.4K, down 3.92. Dominance is still really high, 19.89. It seems like when the crypto market drops, Ethereum's dominance gains. So really interesting. And Luna, it's just crashing hard. But anyways, we got a couple of greens here. These right here are stable coins. DAI, TUSD, and USDT. No, wait. Terra USD is so depegged right now. It came as low as in something 68 cents or something like that, and it crawled back up to roughly around 78 cents. But it's so far off from $1. Crazy. FTT's green, so that's kind of cool. All right, so here's the crypto market cap, down 7.26%, and that's leaves the market cap at $1.43 trillion. That's rough. That's a lot of money leaving crypto. Oh yeah. Oh, sorry. Bitcoin dropped below $600 billion at $599 billion. Crazy times, but crazy times are good times to buy. That's what I say. All right, so here we have the weekly chart. Typically, I do the weekly analysis on Sundays. I was extremely busy with projects, and so it's late, but better late than never. So here we go. Last week, my last week's analysis gave the chart a crab and a bear. So crab meaning it's going to chop, and bear means that has a downward tendency. And for the Bitcoin analysis, it dropped. I said that for last week's analysis, I said that it would drop below 37.5K for the wick down. However, I did not expect it to drop all the way to 29.8K zone so soon. I mean, I have it in my price entries, but not so soon. So that was shocking to me. That surprised me. And BTC printed the 7th consecutive bearish descending weekly candle. So that's a mouthful. So basically you count 1, 2, 3, 4, 5, 6, 7 consecutive candles dropping. And I went back to all the way back to 2013, and I could not find a period where Bitcoin had 7 consecutive descending or 7 consecutive bearish weekly candles. So crazy. Bitcoin, when I did this chart, it was at 31.2. It remains in the bearish zone below the bull market support band, this gray ribbon here, and that's roughly around 40.1k to 41k, and it's also below the 50-week moving average, this pink reddish line here, that's also descending, and that line's at 44.6. The Bitcoin's also below the Bollinger basis, which is this blue line that's shared with the bull market support band. It's below that, and it was crushing the bottom of the Bollinger Band here at roughly around 32.1k, signaling oversold. So when the candle is at the bottom of the Bollinger Band, that's oversold. When it's at the top, that's overbought. So BTC is I haven't brought this guy up in a while. This red line here that's ascending is the 200-week moving average, and so you have the 50-week moving average, this pinkish line here, and the deep red line here is the 200-week moving average. Bitcoin is actually closer to the 200, or was closer to the 200-week moving average than it was to the 50-week moving average, and that's bearish. When it drops to the towards the 200-week moving average, that's very bearish. It's only done that a couple times in its history. The nearest major support is the 30k the 30k level here. That's also shared with the descending triangle. That's the support level right there, and the current resistance level was it's currently right at it right now. It's the nearby resistance is 32. You notice here it moved up to 31.973, almost 32k. So right there. And the volume profile for the current level. So current level is right here. Volume profile it's around the middle of the pack. Highest will be up here. It's currently right around here. And this look at this histogram here, the red and the white here. The daily volume, it's below the moving average. 8 of the 9 previous weeks have been below the moving average. So with a move like this, you would expect a major capitulation. But the fact that we didn't have a major capitulation, and what a capitulation means is just like a fast drop, and with like really large volume, like volume would spike all the way up, like up here. We didn't have that. It's a steady drop with low volume. So we still don't have that major capitulation that typically pretty much wraps up a crash, and then before price moves back up. Let me move this. Whoa. There we go. So let's take a look at the indicators down below. We have the white J line of the KDJ is rounding the local bottom here. It dropped way down here. You can see that it was printed at negative 9.4. It's currently negative 6, so it moved up slightly. But if you go back to these recent periods here, negative 5, down here is negative 1. So that's a very low level. Like if you go back, and this goes back to 2020, August 2020. So that's a very low level for the lowest level for KDJ. Yeah, negative 5. Yeah. So it was very low. I gave that a bear. But the fact that it's leveling off and rounding the bottom here, the local bottom here, that means it could potentially go back up more than likely. And what it can do is if it goes back up strongly, crossing the red and the blue lines here, then that's very bullish. However, it can go back up, curve back down again, and then it could tank even more. So, but in the immediate time, it's flattening out. So that's more like a bear because it's still on the bottom, but it's trending more like a crab. For the white MACD line, it trended down below the red signal line. It was printing negative 2,920 under the red line here and printed the fourth bearish but growing histogram bar. For the red RSI line, all three here, RSI, CVD, the blue, the white mom, they're all trending down. And RSI was at 35, that's a bear. The blue CVD was at 3.96 million, and that's a bear right here, but still in its more upper range. RSI 35, that's near the start of its bottom over sold area, but not quite yet. The white momentum indicator is at negative 7,200, was at negative 7,200, and that's a bear. And that one is right still, like probably heading towards its bottom range. Not bottom range. The lower half range. So it's got some room to move there too. This indicator here, the spot to derivatives basis delta remains negative, and it's growing more negative, and it was printed at negative 0.00099, and that's for 6 weeks in a row, and so that's bearish. So basically, what are we looking at here? Overall, I gave this chart bear and a crab. Bear because this is a very strong downtrend, and so the trend hasn't shown any sign that it could stop anytime soon, with the exception of KDJ here. But that, again, it could change, move up and then move back down again, and then it will continue to drop. So yeah, bear and a crab. Crab because it could be choppy, bear because it has a negative tendency according to the indicators here. So you got bearish here, bearish on the KDJ, bearish on the MACD, bearish for RSI, MOM, and CVD here, and bearish for the spot to derivative basis delta too. So continue bearish, but here's the summary. BTC is likely to pull back. I did this about an hour ago. BTC likely to pull back toward the 32 resistance. It's already doing that. And could retest to 29.6K. And I'll show you 29.6K on the heat map. It'll be easier for you to understand where the next buy wall is at. Less than an 8.5 CPI reading this coming week could move BTC back up, because I'll move because the equities market will probably move up as well. But a higher reading could definitely signal that the peak of inflation is not in, and so it could push the equities market and also crypto market down further. So I think we're gonna have a little bit of choppiness as we choppiness around 32K here, with a potential wick down to retest 30K. But I have other news for you too, so hang tight. Crazy news. I want to show you one of the charts I've shown you in the past, and this is to help me decide if the bottom is in or not. So one of the last sign I'm waiting for is that major capitulation with extreme volume. That has not come in yet, but it's good to take a look at some of these charts I used to identify the bottoms. So here you can see in the previous periods, bottoms come in when the these series of lines here, especially the warm colors, they're on the bottom, and then they start coming back up. but you can see here where the red line here is still at the bottom. But I'll zoom in to show you. Here's a zoom in view of it. So back in January, the red line started moving up towards the orange line, but it didn't break above it. It rolled right above it here, over it here, but it couldn't break above. Here in March, mid-March, around early March, it broke above the orange line, touched the what is this, yellowish green line here, but it couldn't break that either and drop back down below both. See that? Here it did that again. It tried to do that again in early April, but couldn't do it and dropped below. Currently, it's below both of those lines. So in order for the bottom to be in, at least this chart, the red line has to penetrate the orange and the yellowish green line here, and potentially eventually touch this other green line here. But it hasn't. It's come back down. So the bottom's not in yet. And you notice how it's still descending. So like even back here, it was here, went up, down, it's still descending, all of them. Let's take a look at options max pain. If you don't know what these things are, check the description. There should be tweet chains about them. For the 10th, 33K, 11th, 31K, 36K on the 13th, and on the 20th, 35K. Again, these could change every day, but they could be magnets for the price on spot market to move toward. Let's take a look at the contracts that have been filled already, and that's shown by this BTC volume by expiration. You can see that these expiration dates here, these contracts on these expiration dates that have been filled already. Notice how the puts, those are options to sell, but not the obligations to. So they've executed these contracts with puts. There are more puts than calls. Calls are options to buy, but not obligations. So more puts have been executed in these contracts. If you look at what the available contracts that are still open, shown by open interest, not yet filled, for the 10th, 11th, 13th, 20th, and not a lot of open interest in those contracts. So, what that means is that max pain will be less likely to be attracted to those magnet prices I showed you in the past, in the previous chart. Here's the heat map for Bitcoin. You can see here there's not a lot of this blackness up here above the price line, and you see there's a spoof wall right above the current price line here, a spoof sell wall, and that just tried to suppress the price down. This white line I turned on for you so you can see the white line is the what is that called? VWAP. And typically institutions or smart money, they like to use their algos tend to be programmed towards the VWAP line here, and if it's above that, that's more bullish, and if it's below, that's more bearish, and they tend to use that as a magnet for where the price will move. So currently it's above. If you look here, all these red bands here, they got either crushed right here or they disappeared. And there's not any strong buy walls right directly below Bitcoin's price right now. So if just a little bit of pressure, it'll crush it. And right around 29,600 is where the next wall is. But it's not a major wall. It's only like 250 or 60 in size. So the biggest buy walls that we have left is the 25K buy wall. So it's like I forgot. Since I remember, I might as well go through it. The new entry levels not financial advice. New entry, since we got 32 filled already, and 30 was also filled, and Bitcoin moved back up above 30. So now, I don't have a FOMO level in here because at these prices, like anywhere below, like in the low 30s, they're just good prices. So my next, I don't have a FOMO, but my entry level that's been readjusted would be at 30K, I would put 20%. At 29K, I put 20%. 28K, 20%. I put a sweet spot with, I think, 30%. Yeah, 30% sweet spot at 25K. And I 22K, I put in 10%. On the heat map, it'll show 20K as the buy wall. But the reason I put in 22K is because it matches up with this 200-week moving average right there. And that area of confluence is very strong. So, front run it. If it wicks all the way down and doesn't make it through to 20K, you catch it at 22K. So I hope that was helpful. Smash the like if you haven't. Let's go back to some of these here. All right, so, and you can see here on the cumulative volume delta showing aggressive buys and sells. Aggressive meaning market buys and sells. So you see here during this period where they descend here, there was a lot of market sells here. Hits a low point here, pop back up right here, and then some of these larger buy bubbles started coming in, and now it's pretty much it was mostly neutral but slightly aggressive buy if you total this whole area up. So it's slightly aggressive on leaning on the buy side. Here's the this is something I've been telling people to keep an eye on. This is the liquidation levels for Bitcoin on Binance alone for 20 to 100x high leverage. At around 10K, negative 10. So this one is currently reading negative 18, just above $18 billion. Negative meaning they're excess shorts. So basically, all these short levels here, you take the high leverage short levels, the money in them, the open interest. You subtract the open interest of the money in the long levels, you get the difference. And this is the difference. In the past, at around 10 billion, negative 10 billion, because they're short positions, at around 10, the tendency that after a little bit of period of consolidation, Bitcoin has a tendency to violently move up because there will be some manipulation. Someone would take a counter position, going long, high leverage long, like let's say 100x, going high leverage long on the perpetual futures, and then they go and buy up BTC on the spot market, driving price up, and they win big on the perpetual futures, huge, and they get to buy Bitcoin at a much lower price, right? So they win both ways. So I would be very mindful for that move, but typically it needs a period of consolidation first. So I'm not sure when that's going to happen, but it's going to happen. And we are back. I want to make sure I cover everything here. I believe I did. So I appreciate your time. Sorry, this thing is this analysis is a day late, but that's what happens with life. And so I hope you found this useful. And if you did, and if you want to help out and get my analysis out to more people, please smash the like, ring my bell to get notifications, and hit subscribe if you haven't. And then ask questions or leave your thoughts in the comment section. Appreciate it. I'll see you in the next video. Let me see what time it is. Oh, it's 11 o'clock Pacific Standard Time. So I still have Matic and Near Protocol to make up. So it's getting really late. I'll do my best to get them. If I don't, I will make them up in the next few days. So I'll see you then. Peace.